Have you ever wondered whether you could use the equity in your home to generate additional income in retirement? For some people, reverse mortgages can be something to explore. However, it comes with some key caveats. Today, we will explore what reverse mortgages are and what their key benefits and risks can be. All right, so Spencer, today we want to talk about reverse mortgages, something that's in the media and that can be really complicated to understand. So can you just overview what is a reverse mortgage?
Well, first, if Magnum PI and the funds says that we need to think about a reverse mortgage, we've got to talk about it. So here we are. A reverse mortgage, like we talked about in the intro, it's basically a way that you can tap into equity should you need it in retirement for especially basic needs. And it can be particularly helpful in some situations where we have a client who knows that they want to be in the home for a long period of time. They're not going to be moving, doing other kinds of things. So for a small subset of the population, it can be pretty attractive in certain areas, but there's a whole lot of asterisks by this to make sure, if somebody goes this direction, that they're looking at it and seeing all of the fine print.
Okay, perfect. So how does it work?
So if you're age 62 or older, what happens is, most people, they've got a significant amount of equity. They may even own their home outright. And they say, well, I don't have enough income to be able to meet my basic needs here, or I've got a desire to do more living and giving, in this season of life. And so I want to be able to have more funds available, especially in a particular period. So what happens is you enter into a binding agreement with a company that's a reverse mortgage. And there is an amount of equity that you get oftentimes in a lump sum, or could be in an income stream over time, but you receive those funds, and provided that you stay in the home, you're not going to be kicked out of the home, but you will progressively be losing more and more equity, in that home. So you're basically, taking out a loan of sorts against the value of the equity of your home. That's going to typically accrue over time, because in most situations, you're not going to be paying that off. Most people will allow it to just accrue. And then you kind of go from there. So it can be, there's a lot of different trade-offs that we'll dive into, but that's the general structure. You've got to be at least age 62 or older. The loan is secured by your home. You get some lump sum amount, and it can be different based on your age and the condition of your home and the value of your home and all those kinds of different things. And then the loan is repaid when you leave the home, whether you end up selling the home and moving somewhere else, or let's say you go into a nursing home facility, or you pass away and then your estate needs to sell the home or hand the home over to the institution that had the loan against it.
Okay, that makes sense. So let's talk about situations where a reverse mortgage can be useful. We touched on it in the intro, but supplementing retirement income. Can you talk us through that?
For folks, again, who maybe they haven't saved other assets, but they've got a really nice home, or they've got a significant amount of equity relative to the rest of their net worth, they may say, well, I don't want to move. I really like this home. I want to be here for the rest of my life. But I also recognize that maybe I'm not as concerned of passing on this resource to my heirs, or may have, no heirs that they're trying to even pass resources on to. So if we have a situation like that, tapping into the equity of the home can make a good deal of sense. There's a lot of different trade-offs that we have to approach, but if we need to supplement retirement income or even a lump sum type of situation, then that can be a good approach. The thing that is always the caveat here is, just because you have a reverse mortgage doesn't mean that you don't have to pay for things like homeowners association fees, or repair of the home, or utilities, or these other kinds of things. So if we're already in the red in terms of not having enough income, if we do a reverse mortgage, we've got to be careful that we reserve some of that so that we can continue to pay for those kinds of expenses. Because if you don't pay the utility bill, if you don't pay the homeowners association fees, if you don't keep it up to date in terms of the repairs that it needs, then you can have the home foreclosed upon.
Right.
So, with that, usually there's an income situation that we need to look at. That lump sum or that income amount it can be quite helpful. The second thing is the person needs to be staying in that home over a long period of time. You don't want to have all of the origination fees and the higher interest rate and all those different pieces and then end up moving in a couple of years. This is something that would be more ideal for someone, say, in their mid to late 60s, and they look at the future and they say, I'd love to be here for the next 20, 30 years. And I want to be here until I pass away, ideally, and I need some income to kind of supplement along the way. But I can still handle the home. I can still do the repairs that are needed basically there.
So a couple more benefits that you could consider using a reverse mortgage for are things like covering cost for in-home care or establishing a financial safety net. So can you talk us through those two for?
Well, if we have a client who doesn't have other resources that he or she can tap into and really, really wants to stay at home, we have some clients that say, I'd actually prefer to move to assisted living because they're going to cook all the meals there and there are going to be other people that I could have some social interaction with, and there are a variety of different benefits. So, if assisted living is not what a client wants to transition to at any point, they really, really want to be at home, and they know that they're going to have some medical expenses and potentially even have some long-term care expenses, then sometimes that reverse mortgage can help because it can provide some funds to be able to then pay for those in-home care, elements. Again, it can be fairly dicey because oftentimes as we see clients moving in that direction, they also they need to have a power of attorney or someone handling their finances, actually. And so we've got multiple layers of complexity here. There is an opportunity there that some people could slide into with elder abuse, and we want to be very, very cognizant, of that.
Yeah.
So we have to handle that one with extreme care, but it can free up funds, again, to care for that individual in home in a way that if they didn't have access to other resources, they wouldn't be able to stay, in their home. They would have to sell their home, transition to assisted living or a nursing home, and sometimes that's really not what a client wants.
Right. Okay, we'll talk about that line of credit real briefly.
Well, it's the same kind of thing. It's just for broader maybe needs than just say healthcare. So we could say if a client really has a desire to do living and giving in a particular way, or they have expenses that have come up that are outside of, say, the desire for in-home care, then it can give them a financial safety net that they wouldn't have otherwise. They might be able to free up $100,000 or several $100,000 that they would have there at their access that might really help them achieve some financial goals that they wouldn't be able to do otherwise. Because it kind of, in some ways, it gives them access to the equity in their home prior to their passing away while still being able to live in the home. So it can be a mess for heirs because there's less and less equity. Sometimes it's difficult to pay off the home and get anything, as a result in the estate. But if the financial goal is not necessarily passing on resources to the heirs, the companies that provide the reverse mortgages, they can't take anything beyond the home.
Right.
It's not as though they can tap into other assets. The equity in the home is what they have to plan for at the end of the day, even if the account, the balance goes negative there.
Okay. So let's now switch over to some of the risks and the downsides of reverse mortgages. So high costs and fees, you've touched on that, but explore that a little bit more for us.
Well, there's an origination fee. The interest rates can be fairly high. If we have, depending on the amount that's provided, the lump sum that comes out or the payments that come out, those can accrue at a substantial level. And so it just results in a decrease in the home equity, over time. So it's something that we really have to grapple with and say, is this the best way to get access to these funds? If we have a client that has, $500,000 in a non-qualified account and has a $500,000 home and they're thinking about some kind of a reverse mortgage, most of the time we'd say, well, why wouldn't you just tap into the non-qualified account and address that? Now, there could even be reasons why you wouldn't do that, but for the most part, if there's access to other resources, we would look there first because of the costs, the interest rate, the fees, all those kinds of different things.
Right. And you've touched on that heirs may receive less and some of these other risks therein. But talk about the risk of losing the home due to non-payment. You kind of started alluding to this when you were talking about the homeowner's insurance or HOA fees. But what's the risk there?
Well, owning a home is expensive. Anyone who's owned a home knows that it's expensive to own a home. You articulated some of those expenses, but whether it's insurance, property fee, property taxes, an HOA fee, the upkeep. I mean, if the HVAC unit goes out, you need to be able to reinstall an HVAC unit. At the end of the day, they're going to expect that the home that they're having as collateral is going to be kept up by you. And if you don't keep it up, then under law, under these agreements, they're going to have the opportunity to foreclose on you, which is going to be bad in so many different ways. So we've got to be really careful about having enough such that you can pay for all those repairs, all the general expenses all along the way. In terms of what the heirs might receive, of course, it's less because interest accrues and such, but it creates a level of complexity also in your estate in terms of dealing with the company that has the reverse mortgage and then needing to sell the home and other elements that are not as pleasant for an executor.
Right. So the reality here is, as we look at reverse mortgages as an opportunity set for retirees, we just have to say it's really complex. There's a lot of potential for misunderstanding. These are contracts that are written that can be really nuanced. And so if you're going to explore this, we would highly recommend that you consult with a financial advisor. Don't just see the ads on TV and be like, maybe this is a great idea, and go for it. Really consult with your financial advisor to discuss, hey, is this a good idea? Or are there other resources, other ways that I can tap into this? We also recognize the home is an emotional place.
Right.
You may have lived there for 20, 30, 40, 50 years.
Right.
And so the loss of those memories can be really emotional. And so we have to weigh the benefits and cons of, okay, is it worth it to take on this substantial risk because I'm having emotions at play here? And so even with that, we would say it's really important to talk with your heirs, talk with those loved ones about, hey, I'm considering this. What this means is I'll have income, but your estate or what you would get from my estate will be less. We have to always be honest with the loved ones that we are interacting with because it could affect them. And so have those conversations.
As always, if you are exploring going in this direction, you want to get counsel, but you also want to look at multiple different institutions. You want to read the fine print. You want to even pit them against each other to say, okay, if you're in my seat, what are you most concerned about from this side of things? And go the other direction there as well, so that you can understand, okay, here's the trade-offs that you're really facing.
Yeah. Well, clients, if you have questions about reverse mortgages, if it works for your situation, if there are alternatives that you may want to pursue instead of this, we would love to have that conversation with you. As always, leave comments down below, consult with your financial advisor before making any decisions, and we will see you again next time. Take care. If you like these financial planning videos, please share it with a friend, and if you have questions, go to our website at SiriusRetirement.com. This content was provided by Retirement Planning Services. We are located in Knoxville, Tennessee. You can visit our website at SiriusRetirement.com. The information in this recording is intended for general educational and informational purposes only and should not be construed as investment advisory, financial planning, legal, tax, or other professional advice based on your specific situation. Please consult with your professional advisor before taking any action based on its contents. Advisory services offered through Retirement Planning Services, LLC.